Welcome, curious learners, to the deep dive.
Hello, everyone.
Today, we're jumping into Apar Industries Limited, a really significant player in energy and infrastructure globally.
Absolutely. We've been looking through their October 2025 corporate presentation and also the Q2 FY26 investor update.
And the picture they paint is, well, it's pretty impressive.
Our mission today is really to help you understand how a company making seemingly traditional things, conductors, oils, cables, achieves such global scale and, frankly, record-breaking financials.
Yeah, let's start right there with the scale. Because APR isn't just big, they're a world leader in some key areas.
That's right. Get this. They are the world's largest manufacturer of aluminum and alloy conductors.
The largest globally. It's a huge position in the power transmission world.
It is, and it doesn't stop there. They're also the world's third largest maker of transformer oils.
Okay.
And here in India, they're #1 the largest exporter and producer of specialty and renewable cables.
So these rankings tell a story, don't they? It suggests their business is fundamental to how grids are built and upgraded worldwide.
Exactly. It's structural. And that leads us to the latest results, H1 FY26, the first half of their financial year 2026.
Which the sources describe as historically significant.
That's the term they use. Highest ever half-yearly revenue and profit.
Okay, give us the headline numbers.
All right. Consolidated revenue from operations reached INR 10,820 crores.
Wow. And the growth.
Up 25.0% compared to the same period last year.
And profit. Often the more telling figure.
Even better, actually. Profit after tax, or PAT, was INR 515 crores. That's up nearly 30%, 29.9% to be exact.
So profits are growing faster than revenue. That usually signals good things like better margins or a shift to higher value products.
Precisely. And as we'll see, a lot of this is being driven by deep specialization in what they make and also a massive push into exports, especially, interestingly, into the U.S.
Okay, so the plan is to unpack their three main business areas and see what's driving this.
Sounds good. We'll look at the three pillars: conductors, specialty oils and lubricants, and cable solutions.
Let's start with conductors. You said they're the world leader here. This seems to be the main engine right now.
Absolutely. The H1 FY26 revenue for conductors alone was INR 5,885 crores.
Okay, and the growth there?
That was up a massive 39.0% year over year. Volume was also up significantly, 16.8%.
So selling more and getting much more revenue for it. You mentioned higher value products earlier.
Yes, and this is key. The presentation highlights their premium product mix. In H1 FY26, that stood at 44.5%.
Almost half their sales are premium.
Yeah.
So what makes a conductor premium? For most of us, it's just a wire carrying electricity, right?
Well, yes and no. At this level, premium means solving specific, complex problems for utilities and infrastructure projects.
Like what?
Think about upgrading old power lines. You often can't just build new, taller towers or get new land the right of way. It's expensive and difficult.
Okay, so you need a better wire for the existing path.
Exactly, and that's where their tech comes in. They have a tie-up with CTC Global in the U.S. for something called ACC conductors.
ACC?
Aluminum Conductor Composite Core. Basically, these are high-temperature, low-sag conductors, or HTLS.
High-temperature, low sag.
Meaning they can carry a lot more power without overheating and physically drooping or sagging too much between the towers. It lets utilities upgrade capacity using existing infrastructure. It's a huge deal.
So they're not just selling wire, they're selling a solution to a major infrastructure bottleneck.
That's the strategic advantage. And they don't just sell it. The sources mention they've pioneered turnkey solutions for reconductoring.
Meaning they handle the whole upgrade project.
Yes, over 165 projects completed, apparently. They manage the whole thing. That locks in value.
And they apply this specialization domestically, too.
Definitely. Look at the Delhi Metro example. They developed a specific copper-magnesium catenary wire just for them, meeting stringent RDSO specifications.
RDSO, that's the Research Designs and Standards Organization, the railway standards body.
Right. Meeting those specs isn't easy. It creates a barrier for competitors.
Okay, so this focus on high-value specialized conductors is clearly working. What about future orders?
The division has a strong pending order book, INR 7,168 crores.
That's substantial.
It is. And significantly, 24% of that is already marked for export.
Right, let's shift gears then. What about the cables division? You mentioned this was more about high-tech innovation.
Yeah, Cable Solutions is growing rapidly, too. H1 FY26 revenue hit INR 2,954 crores.
Growth rate.
Up 30.2% year over year, and they're maintaining good profitability and EBITDA margin of 10.1%.
What's the tech angle here? What makes their cable special?
The big thing is E-beam irradiation, electron beam.
E-beam. Okay, what does that actually do to a cable?
Think of it like supercharging the insulation. They use focused electron beams to bombard the cable's polymer coating. This causes cross-linking at a molecular level.
And the benefit of that is?
Incredible durability. The material becomes much tougher. They claim their house wiring products get a 50-year life.
50 years.
Yep. Plus, melt resistance and it's flame retardant up to 105 degrees Celsius. It's about performance and safety under extreme conditions.
I can see why that would open doors in specialized markets.
Exactly. The sources mention they supply special cables to the Indian Navy.
Okay.
And they're even developing guidance of optical fiber cables for torpedoes.
For torpedoes. That requires serious precision and reliability, I'd imagine.
Absolutely. It speaks volumes about their quality control. And they're using this E-beam tech elsewhere, too. They were apparently the first Indian cable maker into the EV space.
Electric vehicle.
Yeah, making specialized wiring harnesses using that same durable E-beam treated cable.
And how's the export market reacting to these high-tech cables?
It's booming. Cable exports surged 76.2% in H1 FY26.
76%. That's huge.
It is. Exports now make up almost 42% of the total revenue for the cables division.
Wow. Okay, so conductors are strong, cables are high-tech and growing fast. What about the third pillar? Specialty oils and lubricants.
Right. This is where things get a bit more nuanced. Remember, they're the world's third largest transformer oil producer.
Okay.
But in H1 FY26, revenue was basically flat year on year. INR 2,604 crores, 0% change.
Hold on, flat revenue. But didn't you say volumes were up earlier for the company overall? What happened here?
Ah, good catch. Yes, for this division, the volume did increase by 8.1%.
Volume up 8%, revenue flat. That sounds like pricing pressure or maybe execution problems.
The investor update points to supply chain constraints leading to execution delays, particularly impacting the global transformer oil business.
So logistics headaches?
It seems so. Global transformer oil volume actually shrank by 4.6% in Q2 FY26, according to their analysis. But interestingly, their domestic tea oil business was strong.
Ah, okay. So the India market helped offset global issues.
Looks like it. Domestic tea oil grew 13.6% in Q2. It shows the importance of that home market stability when global logistics get tricky.
Makes sense. And they do have a range of products here beyond transformer oil, right?
Yes. Things like technical and pharmaceutical-grade white oils, and also automotive lubricants through a deal with E&I of Italy.
Okay. So pulling back a bit, we've seen strong conductors, high-tech cables, and somewhat constrained but still large volume oils. What's the strategic thread tying this growth together?
It really comes down to alignment with massive global megatrends. Their products aren't just components, they're enabling solutions for huge shifts.
Like the energy transition, that seems obvious.
Absolutely. That's driver number one. They supply products for the entire renewable energy lifecycle generation, transformation, transmission for both wind and solar.
And India's own renewable targets must be a huge tailwind.
A massive one. India aiming for 50% renewable capacity by 2030 means adding something like 225 GW of solar and 55 GW of wind.
And APR's position.
They claim over 70% market share in the domestic wind segment already. They're basically baked into India's green energy build-out.
Okay, so renewables is one big driver. What else?
Driver number two is infrastructure and transportation modernization. Think about upgrading the grid.
Right, you mentioned the need for higher capacity on existing lines, the limited right-of-way problem.
Exactly. That drives demand for those HTLS conductors and the reconductoring solutions we talked about. They solve that problem directly.
And transportation.
They're involved in railway electrification, supplying Vande Bharat trains, developing products for high-speed rail like the bullet train projects, and, of course, the EV market with their E-beam auto cables.
So grid modernization and modern mobility, what's the third driver?
Digital connectivity, the whole 5G rollout and beyond.
How does that connect?
Well, 5G requires much denser networks. The source material says it needs something like 16 times more fiber deployment.
16 times, okay. That's a lot of cable.
It is. And then you have huge government projects like VariantNet in India, INR 1.39 lakh crore allocated just for last-mile connectivity to villages. That's a massive guaranteed demand source.
And APR makes the specific products needed.
Yes. Optical fiber cables, OFC, specialized hybrid copper and fiber cables, and even OPGW conductors. Optical ground wire. It's clever. It's an electrical conductor that also carries fiber optic strands inside it. runs along the power lines, kills two birds with one stone for utilities, building out connectivity.
Okay, so the growth seems structurally sound, tied to these huge trends. Let's circle back quickly to the overall financial health. Exports were a big part of the story.
Huge. Consolidated exports grew 25.2% in H1 FY26. They now make up a full third of the company's total revenue.
And you highlighted the U.S. market earlier.
Yeah, the growth there was staggering. U.S. sales were up 122.1% year over year in H1.
Over 120% growth in the U.S. That shows real traction for their specialized products internationally.
It really does. Of course, rapid growth, especially international growth, comes with risks.
How do they manage that? The sources must touch on risk.
They do. They mention clear principles for hedging against volatile metal prices. Aluminum and copper are key inputs, obviously, plus managing forex and interest rate risks.
And who absorbs that risk?
Critically, they say these costs are generally passed through to customers in their contracts. That provides a buffer for their own margins.
Makes sense for stability. What about the non-financials? ESG, environmental, social governance, is increasingly important.
They address that too. They have an ESG rating from CRISIL ranked third out of 42 companies in the industrial segment. They achieved an adequate level with a score of 59.
Adequate. Okay. Any specific sustainability actions mentioned?
Yes, they commissioned a wind-solar hybrid power plant for their own use, which they expect will save about 10,000 tons of CO2 equivalent greenhouse gas emissions annually.
Okay, so let's try to wrap this up. What's the core conclusion from this deep dive?
Well, it seems clear APR has built global dominance in truly essential components: conductors, oils, cables.
Right, the building blocks of energy and digital infrastructure.
Exactly. And their record growth isn't just luck. It looks structurally aligned with these massive long-term global shifts: the energy transition, grid modernization, digital build-out. Their high-tech specialized products are hitting the mark.
But it's not all smooth sailing, is it? There are external risks.
Definitely. And the company acknowledges them. There's a quote from the chairman in the update that's quite telling regarding external risks.
Oh, what did he say?
He said, and I'm quoting here, "The U.S. tariff situation is fluid at the moment, with various announcements over past few months, due to which we shall be taking tactical decisions to continue our strategic presence in the market."
Fluid and tactical decisions. That sounds like coded language for we're watching this carefully, things could change fast.
I think that's a fair reading. It highlights the tension between their huge international success, especially in the U.S., and the unpredictable nature of global trade policy.
Which really brings us to the final thought for you, the listener, based on everything we've unpacked today.
Considering that volatility the chairman mentioned in global markets, particularly around things like U.S. tariffs,
How significant do you think the resilience and growth of their domestic business will be? Specifically, things like the domestic transformer oil market that held up well, and those high-tech cable offerings like E-beam. How important will that domestic strength be in balancing their future international strategy and navigating those global uncertainties?
it's a really interesting balance they have to strike: domestic foundation versus global ambition.
A great question to ponder. That brings us to the end of this deep dive. We hope you found this look into APR Industries insightful.
Thanks for joining us.